chase my dollars and make it hurt.
Good day, everyone. Welcome to another episode of Let's Talk Commercial Real Estate Investing, the Black Community Edition. It is, as everyone knows that follows, Education Wednesdays. I'm your humble host, Dominic Green, Managing Partner of Tenneco Commercial Real Estate Services here in the DFW Marketplace. Hope everyone's doing well today. Out and about on a couple of assignments, meeting, doing some research, some due diligence. I'm also looking for opportunities for the affordable housing, preserving affordable housing. I ended up working on the syndicate, working to put a group together. I'm still in that process, finding the right partners to put in place, because money follows great management. So I want to make sure I have that right. People that I can work with, that we all can gel. Everybody knows their roles and everybody has a mission, because I'm looking to grow this thing to scale. So not something that's just going to be a one-off. So we work together, definitely looking to grow that into big business so we can take bigger checks and do bigger deals and have a greater impact in providing, preserving affordable housing, and let that be our solid foundation for everything else that we do. So with that being said, today, with everything that's going on, I wanted to talk a little bit about student housing. Here's the reason why. For those you don't know or don't remember, or maybe I never mentioned it, I went to the University of Texas at Austin. As I always say, had I known what I know now, I probably would have just used all the money that I got then, any money that I made, any that refund check that you get after paying all your tuition, heck, e-loans, all that, man, I would have been buying property, because it's just ridiculous on whatever the things cost down there nowadays, and with all the things that's changed, would have been great investments. But you know, neither here nor there, no better next time. And if the opportunity presents itself, I definitely will jump on it, as well as teaching the family about it. But nonetheless, a couple of student housing properties, one that I actually lived in before, a couple that I know about, are actually hitting the market here soon. They're coming to market. And that's amongst other couple of properties, student properties that I've been seeing here lately. Baylor, there's another, I think it's like 600 beds that's coming available in College Station. Quite a few actually in College Station. But all that to say that, hey, you know, that these deals are hitting the market. It could be opportunity for those interested. I think I've talked about it before. Student housing, man, is a whole different type of animal compared to just your traditional multifamily. Obviously, you're renting students. Depending on the type of student that you're renting to, the amenities are more, the property gets used more, your operating expenses are higher, you're leasing about the bedroom. You gotta know that, you know, you're basically leasing by, in a sense, the semester, right? So what you'll notice, like during the holidays, the property is pretty much empty. All the kids are home, you know, go back home. Weekends sometimes as well. Obviously weekends sometimes there's parties going on, unauthorized parties going on, drinking, you know, all those things, right? But when it comes to leasing these properties, man, if you don't lease in the prime leasing time, which is the fall, your property will be empty because there's no students. There's not a lot of students that's coming in after the fall semester has already started and say, hey, I need to rent some space. Unless they're transferred, but even then, there's probably other properties that they can have choices into. So a lot of marketing dollars goes into it. Experts in leasing, the management team, the leasing team, providing great services. I mean, all that goes into play, man. So it's a little bit different where you're catering. You're dealing with parents, especially because a lot of those parents are going to be guarantors on the lease. You're also going to be looking at, because they do get student aid, so how much that student aid is going to housing, because they let you use that as well. Some students work, and then you have it to where some of the properties you can actually segment it. So what I mean segmented, like graduate students for graduate student housing, so they're a little bit more, obviously more mature. They're trying to get out. They're doing dissertations and all that stuff, so they're focused on school, working, not necessarily any extracurricular activities, but they want a great place to stay. That's pretty quiet, reserved. Then you have different luxuries in there, kind of like your mid-tier, your higher tier, and then obviously location is very, very important. And the difference of the type of premium that you can charge. And if you can't be on the campus, right next to the campus, you definitely need to be on the bus route, right? It needs to be easy for the students to get to and from your location to there. Also, another thing that you want to pay attention, that there needs to be some type of grocery store nearby. I know with Instacart and DoorDash and stuff like that, that's available. But for the most part, grocery stores is going to be a key, in my personal opinion, through the experience that I had. The closer you are, the easier it is. The students, when it's if they don't have very much money, they'll definitely try to do a lot of cooking at home, because you can only eat the dollar menu and try to go to. You can't always get to campus to try to get the free food, right? So all that comes into play. Obviously, the type of amenities you have, the student lounges, internet is a big, big key. So if you can provide it, it needs to be the latest and the highest you can provide. Security is a big as well. And then engagement. Having the community involved, having the community, active, making it a great place to live, because word of mouth travels. And then if you can, work up with a partnership with the university, depending on what university your property is supporting, to provide housing, because believe it or not, some universities require their students stay on campus their first year. Some don't. Some you can go anywhere, but some require the first year. But even with that, a lot of times they don't have enough available rooms or available housing, so you can be a subsidiary of that. And like I said, there are companies, publicly traded, that make billions of dollars of just renting to students, and they're publicly traded. So, like I said before, sometimes you look for a model and see how they do it. Because they're publicly traded, all the information is public. You can kind of get an idea of what's happening. And I'll give you a ticker symbol, ACC. That's American Campus. American Campus Communities. They are the premier owners and operators of student housing, and they mainly target the Power 5 or the Power Conferences and Tier 1 schools. So typically the student enrollment needs to be more than about 30,000. I know I've seen stuff that comes on the market there where there's it's a community college. I tend to stay away from that, because community college, a lot of those people commute. They don't necessarily need to stay by or near campus. So that's I would get away. I wouldn't look for anything like that. Especially if you're going to do prestigious type institutions like your SMUs. I see a couple properties that come on there that I wish I had an opportunity that I was looking to get involved in. But those are not only trophy, but those are generational plays. SMU's not going anywhere, trust me. They got a lot of money. But with that being said, occupancy on student housing is kind of upticked. I know there was a lot now, going on, especially when they when kids back on campus. You had a lot of kids doing online schooling, online courses. And they're still doing a combination of that, kind of hybrid, kind of same thing that's going on with office, right? Work from home. But nonetheless, the college experience is still key, right? That's what's driving a lot of the people still want to go to college, paying the high amounts for tuition. Especially if you go into one of these big schools like UT and stuff like that. Those type of schools are always going to draw people to come there, your Harvards, you name it. So for that, those places are always going to require and need student housing for years to come. You typically underwrite them just like anything else, with a couple of nuances. I said the expectation that you're going to have a higher operating expense, but you are leasing by the red room, so that helps with your income. Offset that, as opposed to just leasing just one room. Then a lot of those properties are going to have to where each individual has their own bathroom, and then they just share the common area, so they can have their own individual lease. And they'll do a 12-month lease, 6-month lease, 9-month lease. Some pretty standard stuff there. Like I said, the operating part is a little bit different. But like I said, I think these properties, because everybody's still chasing opportunity, chasing deals. Multifamily's on fire still, industrial's still on fire. And so with that being said, for a lot of individuals or for a lot of owners, this is the time for them to sell. And a lot of times you hear them talking on the conference who said stuff that we had struggles with personally, stuff that no longer fits their portfolio, no longer fits their thesis, because they're either upgrading the scale or doing development right on campus. So they changed their strategy, so they're looking to sell. Like I said, these particular properties that I know they were coming, I was made aware they were coming soon, off of Riverside. So, and there's been a whole lot of new development going on over there. Tesla's over there now. I think once Microsoft is not too far away from there. They got a building there. So, and like I said, the buses run there pretty much 24/7, at least during the school year. And then they, create a good environment off campus, parties, all that stuff. So, nonetheless, something to pay attention to for those who are looking for or still trying to figure out, what they want to invest in. And then there's also, the smaller schools that offer student housing. I think, from my due diligence and how the big guys do it, and some of the people in between, really depends on the enrollment. So the larger the enrollment, and it's been steady year over year, that kind of gives you an idea of how much housing is needed compared to what they already have available and what's in the market, what's being built. So I think, in my opinion, like if you start going with these smaller schools, like your Howard universities and stuff like that, you probably want to be closer to campus, if anything, as opposed to having to find something that's way out of the way. Because then I think in those cases you're probably looking at more of just your traditional multifamily and not necessarily student housing. So that means that if you're underwriting for student housing, but it's really multifamily, it's going to be this, and you're buying it that way, you're going to put yourself in trouble. So I think you definitely want to pay attention to that. Definitely have a conversation with the university, figure out about their housing situation. Is there a lack of housing? Definitely go there and see. There's nothing like being on the ground and getting the idea and the feel for, are there a lot of for lease signs in the area, right? So I was in the area, and this has nothing to do with student housing, but it tells you about kind of, even though it's a great area, there's a lot of for lease signs, and it's the same management company funded it, which is ironic, right? But nonetheless, a lot of for lease signs. But I know about that market is a lot of the multifamily properties or residential properties are one bedrooms, right? And what you get with one bedrooms is you can have a lot of transient and a lot of turnover, right? Versus whereas two bedrooms, where you have kind of actual families in there, you have a little less turnover, especially if they got kids, they got them in school. The schools are great. You got somewhat affordable. They're going to want to stay there for a while, so you're not going to have as much turnover at your property. And that's the one thing about affordable, right? Affordable housing. The key in running those things and investing in them is managing your turnover. Because in your regular multifamily, you could turn over anywhere between 30 to 60% of your rent roll, over a year. And your turnover costs are anywhere between, on average, $225 to maybe $325 on the high end, depending on what the finish is and stuff, the interior and stuff like that. But roughly in the 200 range, mid to low. So if you're turning over that much, that's a lot of money that you're spending. Especially when you're trying to keep it affordable, you don't have the same luxury of raising, or you can raise rent, but you're not trying to raise rents so much that now you get out of the range where your tenants are paying more than 30% of their income, and you're in the 50% range or so. Because you want to, the whole goal is to maintain affordability, but you can't be affordable if your expenses are out of whack, right? Because it's a thin line, or it's a balancing act between having enough income to come in, managing your expenses, and then making sure at the end of the day you got a profit that you can provide to your investors, obviously yourself. Which again, when we're buying these properties, is to what? Obviously make an impact. That goes without question. But also to take, have ownership, cash flow, generational wealth, inspiring your family and family members about ownership, especially in real estate and commercial real estate, and leveraging that cash flow into funding things that are also important to you, supporting friends, families, other businesses, investing in them, because we know that the investment in our community from a venture standpoint, people that look like us will get not as much money. So if that's something you want to get into, provide that opportunity, because the people who do like the big VCs that invest in these startups, because we have startups that people that look like us have startups too. They just need capital. You have the opportunity to get on the ground floor, because as they say, the insiders are the ones that make the money, will make the majority of the big money, and then it's the guys after that that write the big checks, right? So supporting the community, taking care of your family, supporting charities, foundations, and the like. And that's just leveraging the power of commercial real estate, right? And then with that, you have certain type of influence because you own stuff. And with that influence, you can make other types of changes that impact not only yourself, but your community, and push certain agendas forward. So all that to me is all wrapped up. So like I said, not to kind of go off track a little bit, but to get back to the original point, let's look at student housing. For those who are interested, look at it. Do your due diligence. Start getting on the mailing list to get that information, especially if you're trying to be like in the college stations and stuff like that, you probably want to be more local, give them more local brokers. Any of those universities like that, definitely want to probably be dealing with more local brokers to get that type of inventory. If it's something big and it's more institutional, then your larger brokers will be there. Your Newmarks, your CBREs, JLs, and stuff like that. They'll be, or Cushman Wakefield, they'll be involved in that. More institutional grade, more newer properties. Anything that's smaller, anything that's older, probably more local. So, with all that being said, like, share, subscribe, leave a comment. Let's continue the conversation. If I can be of service, definitely let me know. As I say, I don't know everything, but you'll never know everything in any business, in my opinion. But I'll know enough and continue to work to master it, continue to get better at it, because I'm in this for the long term. I've been doing this, I don't know, 5 years or so now, and this is where I'm going to be. And off that, helping bring other people along, lift as we climb, because I shouldn't be the only one. I don't want to be the only one, and we could work together collaboratively, because that's what this platform is about: to be collaborative, to work together, group economics. I'm not about fighting. I'm not about any other thing. Partnerships. That's what I'm looking at. How can we collaborate? How can we partner? Do we have the same values and mission? Great. What's your strength? What's your weakness? How can we work together? Because the more we can do that, the better we can change and improve everybody, right? So, to get off that, again, like, share, subscribe, leave a comment. Thank you guys always for tuning in. I definitely appreciate it. Every Wednesday, you could be somewhere else. Shoot, you could be looking at anything totally different on YouTube, or wherever you're viewing this at. But I thank you guys for supporting. Thank you guys for keep watching. Do my best to keep providing great content, great information, things that I see. And if it's something you guys want to learn about or discuss further, definitely let me know. Reach out. My information is definitely on the channel in the link. But let's continue to talk commercial real estate, right? Happy investing, guys. Peace.
These my dollars make it hurt.